Does this strategy actually work? Let's find out. Most traders jump into the market without proof, but today I'm doing the opposite. We are going to be backtesting this strategy to see if it actually works over real market data. If you care about consistency and not gambling, then this video is for you. Stay tuned for what's to come. So welcome back, guys, and we're actually going to backtest gold from January 2025. So with the strategy, or with my strategy, is very simple. Whether you choose to call it SMC or SLP or whatever, supporting resistance, whatever, but it's basically the idea of market structure, liquidity, and point of interest. So just like what I've marked here, market is making higher highs, higher lows, higher highs, break of structure, inducement, then you take an entry from another block, then you take an entry from another block, and the point of entry is not only an order block, it can be a breaker block, but in this case it's another block because our inducement already touched our breaker. So more of that later, but I was just introducing the idea of what we are doing. On the sell side, same logic: lower lows, lower highs, lower lows, break of structure, pullback, inducement, retracement into a point of interest, then sell to the downside. So the same idea, same strategy. You take yourselves, right? So this is what we are going to be backtesting on, and we are starting from the new year. So let's get into it. I'll delete this. Let me delete this. Okay, alright, good. So most times analysis, or I start my analysis from the higher time frame, or at least for every trader you must make sure you are familiar with the higher time frame to see what price is doing. At least if you're a day trader, a scalper, your 4 hours, your 1 hour, or your daily, you must check. But I'm writing on the weekly just to see what price has been up to. So we've seen that gold has obviously been very bullish since October of 2023. We have been bullish. Then we got today's retracement, price push back up. So I mean, we basically get we get what is going on in this zone right here. And someone might argue that this is a consolidation, right? This is a consolidation, but since we are day trading, this is on the weekly. So I think we can navigate our way through, right? If this was to be happening on maybe the daily on 4 hour, that would have been a big problem for us. So let's start our analysis. Let me delete this. So on the daily, mostly I like to start from the daily. So on the daily, what do we see? So on the daily, we have been bullish, very bullish. Then we had this retracement, right? Right here. Now someone will argue that this retracement broke this low. This retracement right here broke this low, right? So this is a market structure shift. So they'll put their break here like this, and they'll say, okay, since this is a market structure shift, where's our inducement, and this is the order block price will be selling from. So we saw that we broke this low, market structure shifts, price tapped this other block, tries to come down but failed, tapped again, tried to come down again but failed to break this low. So now what I'm seeing here is that this is actually a weak low. This is a weak low. This low is a weak low. This low right here is a weak low, and this high is also a weak high, because this high failed to break structure to the downside. Now the reason why I'm saying this is a weak low is because this low failed to break structure to the upside, right? This low failed to break, or someone can argue that this low broke structure, because when you look at this, when you zoom down to the 4-hour, you see that this is a 4-hour high. So this low coming here, or this move up here, broke this. So one might argue that this low is strong. So let's check what I'm saying on the 4-hour. So on the 4-hour, right, you see what I'm saying. So on the 4-hour, this is a high, and this low led to the break of this high. So this low is actually a strong high. This low is a strong high. It's a strong low, sorry, a strong low. Now this high, I don't consider this high a strong high, because it failed to break this low. And these wicks, I don't consider wicks as a break of structure. A wick is actually a sweep, so I consider a wick as a sweep. So we swept these lows, then moved back up. So yeah, that's it. So let's go back to the daily. So on the daily, what do we see? We see some kind of resistance right here, right? And we see that this strong low. Now what the strong low means is that a strong low is not meant to be broken, or a strong low is meant to take price to the upside, right? So this strong low, we see price reacting from this other block of this strong low. Now you notice that this low also swept liquidity right here. It swept this as liquidity. So this low is actually very strong. This low is actually very strong. So on the 4-hour, on the 4-hour, so on the 4-hour, this is it. So we saw that this low broke this as a break of structure, or market structure shift to the upside. This becomes our inducement. This low becomes our inducement, and we get price reacting from this other block. So now this is where price currently is at. So now what are we expecting? Now I'm expecting more upside. I'm expecting more buy. So you see that we see a internal break of structure here, inducement, then this other block has been respected. So now, since I have gotten my directional bias, the price is going upward. Now I can scale down either 1 hour, 30 minutes, whatever time frame that will favor me, or whatever time frame I want to use. I can scale down and actually start looking for entries to join the move, right? So this is actually very clear on the 30 minutes. Break, inducement, then. So now on the 30 minutes, what are we seeing? We saw this break right here. We saw this break, inducement, and we started pushing up from here. Now we have this break. We have this pullback as an inducement. So ideally I would mark this out as a kind of block that price, I will expect price to come back, respect, and start moving higher. Then this low would actually become my inducement. That low would become my inducement. This low would be my inducement. So normally I would set my limit order right here, stops slightly below the block, and then my target, mostly my target. So let's go to the forward to look for a target. Now since we are bullish and we are expecting more upside, what are we expecting? We are expecting price to break this high. So this high can be our target. This high can be our target. Now another thing is that for my target, I don't consider anything less than 1:5 risk to reward. So if my target is on this high and it's a 1:4, and I know that when price breaks structure, at least it will move a little bit in the direction of that structure before it reverses, I can take the risk of adding a few tips, so I guess my 1:5. Then let's see how price reacts to this. Let's play price and see how it reacts to this. Okay, we are moving down. Okay, so guys, do you see that? Do you see how price just stopped and started moving? Let me monitor this trade on the 1 hour. So now for as a means of re-entering, one technique I use to re-enter my trade, or when I miss, one technique I'll use is that this was the high we broke. This is the break of structure. We broke this and we broke this. So I'll mark this out. So when price breaks out of this, when price breaks out of this zone that I've marked out, I just take an entry, stops slightly below, then 1:5. But in this case, we saw that this is a wick that came to tap our entry and started moving. And if you study price, you notice that about 80% of the time, if price taps your entry with a wick like this, most times price will come back either to fail at least 50% of that wick before it starts moving. And I've studied this. It happens most times, if not all the time, but most times. So I'll be careful with that kind of re-entry. So I'll wait and see if price will actually come back to fill this wick before moving, before I can add a re-entry. So let's see what happens. Let's play price and see what's happening. So I'll make this a little bit faster. Okay, so price did not come back to fill this, and now our take profit has been hit. So since price did not come to tap our entry before breaking this high, what our new take profit system that we could have used is that this is the last high price from before tapping. So in anticipation of more bullish move, we can see that our take profit will be on this last side, because we know that in a bullish market structure, price moves higher highs, higher lows. So if we've moved the higher high, a higher low, what we'll be expecting next is a higher high. So this high will definitely be broken. So this could have been our new our new target, right? So I think you basically understand the system now. So this is how we are going to be trading throughout the whole backtest stuff. So the video will be forwarded and be much faster now. So we have our first win in January. So now let's look for more entries. So I'll go back to the 4 hour and see if I can find more entries. So now we see this. Okay, let's go to the 30 minutes and see what is going on. So we had this break, we have this double break of structure right here, in fact triple break of structure. We had this right here, and we had this pullback as our inducement. We had this pullback right here, this black candle right here as our inducement. So point of interest. This could have been our point of interest. This would have been our point of interest, and this could have been an entry too, but we missed this trade. So well, let's see what can happen next. So the video is going to be much faster now. So this is the next week. So this is how we ended the last week. So market has opened on Sunday. Now on the 4 hour, what do we see? On the 4 hour, do we see? Mind you, our overall target is this area. We are hoping to break this resistance level that we got on the daily. So let's go back to the daily. So this resistance level is what we are hoping to break. So on the daily, what do we see? On the daily, we see price reacting from this level. On the daily, we see price reacting from this level. So from this level, we'll be expecting more bullishness, more price. So let's scroll down to the lower time frame, either 30 minutes, 15 minutes, whatever lower time frame you want to use. So now this is it. So this is it on the 15 minutes. So this is where we are currently. Break of structure, our inducement right here, point of interest. So I trade here, take profit as a 1 to 5, limit order set. Let's see what price does. Okay, so we are triggered. Okay, let's see what price does. Okay, this was a loss. This would have been a losing trade for us. So our first loss of the session. This would have been our first loss of the session. Now what do we see price doing? Now I told you about wicks. You see this long wick here. We finally see price coming back to either fill it or sweep it or whatever. So this is what price is doing right here. So let's see the intentions of price. Okay, so price came back to retest these levels. Mind you, these are the levels, or this is the level we found on the daily. And price came back to retest. So ideally, we weren't even supposed to be trading. We were supposed to wait for price to retest this level, but that was our mistake. So yeah, we own the loss. Now let's go back. And see if we can have. So on the 30 minutes, what do we see? Break of structure, inducement. Let me see this clearly on the 30 minutes. Right, so break of structure, inducement, and order block. Now you see all these successive bearish candles here. It's difficult for me choosing another block. If I'm selecting all of these, our stop loss will be very big. So I'm trying to refine it by going down to the lower time frame. So on a lower time frame, what do we see? First break here, second break here. So our order block someone might argue for these blocks below here, but to be on the safer side, because of this block right here, I'll choose this. And for an entry like this that I'm so confused about the other block, I wouldn't set a limit order. I would wait for price to get here, then I'll look for a market structure shape on the lower time frame. Since we are coming in with a bearish structure, I'll look for a market structure shape either on the 1 minute, 3 minute, or 5 minute time frame to take such an entry. So let's play price. Okay, so this is it. So you see, if I had set a limit order, price would have disrespected it, as I said earlier. So let me bring the bars back. So once price got here, I'll scale down to the 1 minute time frame. Or the 1 minute is not available on the trading view replay, so let's use a 3 minute. So on the 3 minutes, what am I seeing? Okay, let me play price. So this is what I'm seeing on the 3 minutes. We have a sweep here, guys, we have a sweep here. So let's wait for a break of structure. Okay, right. So this is the break of structure. First pullback as our inducement. Now we select this block. This is much more clearer than trying to guess on the high time frame and taking a loss. So this is the block I've selected. Limit order set, stop loss a little below, target 1:5. Okay, let's forward price and see what price does. Okay, let's monitor price from the higher time frame. Okay. So if price hits our target before retracing, okay, no, we can still wait for the trade because this trade is still at the origin. It's at the origin of the move, right? If this trade was to be in the middle somewhere here, then and price hit our target, would have destroyed the limit order. But since it's at the origin of the move, our limit orders can still be here. Maybe price is not willing to come here now, but in the future we could see the reaction of price from this level. So let's continue watching price. Alright, so what we see, we are seeing price reactions. First, break of structure inducement, then we had price buying from this other block here, which we missed, and another break of structure right here, inducement. Price came down to respect this breaker block and bought from here, that we also missed. So let's move to the higher time frame and see. Okay, so we see what we missed there. Because of not paying attention to the higher time frame, we missed out on this block right here. So we see where price was reacting from. So because we were not paying attention to the higher time frame, we see what we cost ourselves, right? So if we pay, that's why I said earlier, the higher time frame is what price did here. This is where price was reacting from. So when we got here and we scaled down to the 30 minutes, you see the clean reaction on the 30 minutes. So with this, we could have chosen to look for an entry on a lower, very low time frame, on maybe 5 minutes or whatever. So this is it. So even a 5 minutes did not give us an entry. Once price tapped, it just moved up like that. So sad to say, we also missed this wonderful trade. Because of focusing too much on the lower time frame. Now let's zoom out again on the higher time frame and see if there are any other opportunities that we are not supposed to miss. Let's check the daily too. Good. Now the daily has broken this high. The daily has broken this key level right here. It has broken this key level. So we see how price will react from there. So we have our break of structure. Okay. We almost missed. So let's bring price back here. So we see we tapped that daily level that we broke out from, that we marked earlier. This is price tapping it. So I can scale down to my 3 minutes time frame. 3 minutes time frame. What do I see? Someone could argue that this was a low price, but I don't like dealing with stuff like this. Right? This is more ICT stuff. So let's wait for price to take out this main high and see how we can react from there. Okay, we took out the main high. So in the 3 minutes, you can see there are a lot of blocks, so which is very confusing to us. So let's go a bit higher on the 50 minutes and see if price will be much clearer. Okay, so on the 50 minutes, price is very clear. Price is very clear. So we've had this break. Now let's wait and see if we're having this pullback. Let's see if, okay, so this pullback becomes an inducement. We'll be waiting for price right here. So did we miss the trade? Okay, maybe we missed the trade. Guys. Maybe we missed the trade, guys. So we missed the trade. So now, still on it on the high time frame. Still bullish. I'll be waiting here. My price is at this resistance. Let's see what price does. Price is reacting from the resistance. Let's see. Okay, so we came back to retest. We came back to retest. We came back to retest the level. We swept this low. Now we've broken this high inducement. I'll be waiting for price right here. This is where I'll be waiting for price. Stops below this low, and then my take profit -5. Let's see. Did we miss out again? Oh no. Why are we missing so many trades? Guys? Why are we missing so many trades? Is it because we are trying to look for confirmation and not entering the trades aggressively? So you see how price has been reacting from the levels in the high time frame, but because we are looking for confirmation entries. Now with this bullish move, I guess price will break this resistance and will still be moving higher. So our bias is still upside. But here we are missing trades here and there. Okay, so let's see what price will do. Okay, so this is a block waiting for price reaction from. Let's see how it goes. Why is leaving us? Guys, so that is the end of January, guys. That is the end of January. That is the end of January. Now we broke this resistance, and unfortunately we've had no entries. The last time we entered the trade was on 13th, and we had no entries to the end of the month. Now let's see.
So being too much on the lower time frame cost us, being too much on the higher time frame also cost us. So we will learn to balance our activity from the lower time frame and the higher time frame more, because this has actually been affecting me a lot in my trading, and I've been having a lot of missed entries. Mind you, this strategy is I'm still learning. It's something I just learned, right? Like, I've been trading for a while, but I'm just implementing this into my trading. So we are going to do better. We are going to do better in February. We are going to do better and see, because the missed entries were crazy, man. The missed entries were crazy. So we will see. There will be part 2 of this video, and we will see how we do. All these opportunities that we wasted in the market because of fixating on just one time frame, and that is very dangerous, and this should be a lesson to all of us. There must be kind of a system or a way to combine all these time frames to be able to make our trading efficient. And this is something I'm still learning, as I said earlier. So we will do better, and we'll try to implement it more in our trading. So don't forget to subscribe and stay tuned for the part 2 of this video.